Well, companies that do business abroad naturally would want to use the software that is easy to use, compliant, and familiar to them and to their headquarters. But in China, there are rules regulating specifically how the accounting software shall be designed, like what functions it can have and what functions it absolutely cannot have. The fundamental principle is that the accounting software shall be designed to meet the requirements of China GAAP. So the answer is yes, foreign businesses can use the same accounting software in China, but there are many constraints. And 3 of them are particularly important for multinational companies considering adopting their own accounting software. The first one is that the software interface shall be in Chinese and it needs to support for Chinese processing. So what it means is that not only the display interface shall be in Chinese, but it also needs to allow us to input Chinese characters and display Chinese account names and descriptions properly. But it doesn't mean that it has to exclusively contain Chinese. For example, you can surely add English in there and make it bilingual. And second, the account classification and coding functions should conform to the accounting standards in China. And here in China, there are rules about account codes, which is published by the Ministry of Finance. And in practice, for some accounts, their account codes simply cannot be changed. You may add accounts and sub-accounts, but for the predetermined account codes, we would have to follow the rules. And finally, it is required that the accounting software shall be able to display and print accounting vouchers, ledgers, and financial reports in a format that is in line with accounting rules and regulations in China. In fact, there are specific requirements as to what information an accounting voucher should contain. It even regulates what color you should use for specific entries. For example, if you have an entry to reverse a previous entry, the new entry should be displayed in red. So in conclusion, the general principle is that the accounting software has to comply with accounting standards in China. So if you're using the accounting software as a group, localization is required. But fortunately, there are many good solutions that exist to do it. The most obvious benefits of adopting the group accounting software is information integration. Operational-wise, the headquarters will be able to access the real-time operation status of a subsidiary, and some of the supply chain tasks could even be processed centrally by the headquarters, which would grant them greater control over the subsidiary here in China. And accounting-wise, besides the real-time access to the accounting information, a modern accounting software may help to map the chart of accounts and complete GAAP conversion automatically, thereby enabling consolidation of financial statements across multiple jurisdictions. But one drawback of using the group accounting software, however, is that it requires time and cost to configure and to localize it. Sometimes this process can take up to 3 to 6 months to have the whole system online, which may not be very practical, particularly when the Chinese subsidiary is not very large in scale, it's not profitable, or simply doesn't have any highly complex financial reporting requirements. So it may not be the most cost-effective solution to implement an integrated group accounting software solution here in China. So for businesses that do not mind that drawback and the cost of localization, using the group accounting software could be a path that they may want to consider. However, for those who are more time or price sensitive and don't need that added layer of control, sourcing a local software solution could instead be a viable option. And there are actually a number of choices to choose from in China. So I guess in the end, it really comes down to the individual company's unique business needs, whether or not to source locally or to configure the parent company's accounting software.